Are you equally concerned about the collapse of WeWork? And what real estate stocks do you like long term?
WeWork. I mean, we talked about it last week, but once a company says, "Hey, it's not looking good for us," I would be concerned. The thing that really shocks me more than anything is like the CEO's ability to continue to raise capital for other projects, which is a privilege that we don't have. At the moment, there are no real estate stocks that I really love in the traditional sense. If I had to pick some out, I would lean towards McDonald's and Walmart. If I'm going for like absolute safety, Walmart has a stranglehold on the retail space, and they've innovated in a very interesting way over the last 10 years and has built sustainably. McDonald's, you can argue, is the biggest real estate company on earth. But anything else that has real estate exposure at this moment because of how they value the companies, I don't love at the moment. Like, most important thing, and this is something, Rashad, I know you stressed before, going back to episode 70, you got to take all the risk off the table. Like, what could I invest in? Like, if I had to put every dollar I had into something and I'll be safe. If I'm looking in the real estate space, McDonald's and Walmart are the only two that I'm like are rock solid. Are there some other ones? Yes. But if WeWork is in trouble, which they tried to make a hybrid of the tech and real estate model together in a publicly traded company and it didn't work, there's some other ones that are going to be in trouble as well coming forward. And this is the crazy part. Rates have not gone as high as they can. Like, mortgage rates can go to 9%. For those of us that are old enough to remember, like 7% is the median. What about those who have bad credit?
Yeah, I mean, and we live in this environment where it's like the news is now, right? So when you hear 7.25, and they're saying that's the highest it's been in 15 years, it's like, oh wait, 15 years. But there were people 30 years ago who were buying homes, right? And like you said, like the people who don't have 700 or 750 credit, what does the interest rate look like for them? So that's a part of it. The interesting thing about the WeWork thing, and I guess the transparency is important, right? Because on Tuesday they said they have a substantial doubt about their ability to continue operating over the next year. Substantial doubt. This is like the company is saying this. And so it's going to, like, when we talk about the effects, I looked at the numbers for New York City, and like when I was on the phone with you, you kind of heard me listen to it. I'm like, this is crazy. So they own 7 million square feet in New York City. 7 million square feet of commercial real estate. That's troubling. Right. When we see companies, obviously COVID affected WeWork tremendously and how the company was run. I mean, if you never watched the documentary, go watch the documentary. Please. That's troubling, especially for commercial real estate here in New York. And I mean, I guess throughout the world. When I read the report and I heard the article itself, it made me think about what we talked about in Market Money's, like you said, with Dave Gross. When we said, what's the next domino to fall? And the first thing, no hesitation, commercial real estate. And so hearing this report and then reading more information about it, I'm like, yo, this is about to happen. It looks like this is about to happen. So, I mean, yeah, I think the long-term effects are there. There are some stocks, though, that.
But I mean, that's still, you said how much real estate do they own?
7 million square feet.
That's not, it's over 6 billion real estate.
Of course. I'm just saying it's still
a drop in the bucket. The number sounds bigger than what it really is.
Do you think 7 million square feet?
It's not going to affect New York real estate. No.
I'm not saying that it affects, I'm saying commercial real estate in general, right? Like that's just one company, right? But that could be a domino effect of multiple companies.
Well, commercial real estate is in trouble regardless, but I don't think that WeWork has any effect on it.
No, but the question was about WeWork specifically. That's why I was giving the numbers on WeWork.
No, I'm saying I just don't think that if WeWork went out of business today and they have to sell all of their real estate, they'll be able to sell that in a couple of months, like, and probably shorter. Like there's a high demand for real estate right now in New York City.
So who do you think would acquire them? Because that could lead to a potential great company.
Yeah, you're saying high demand as in another corporate enterprise coming to take the real estate from them?
Whoever, corporate enterprise, wealthy people, Saudi Arabia. I mean,
we got to, and Blackstone and BlackRock. If we're gonna be super honest, probably would be the two biggest ones.
Yeah, somebody will buy it.
So there's a couple of real estate stocks. I'll run them off, and it's one of those things where when we when Warren Buffett speaks, I pay attention to it. And so he ran off a couple. So D.R. Horton was one that he liked.
I like D.R. Horton.
Berkshire Hathaway bought over 6 million shares. Lennar was another one, took a LEN, and then NVR. So those are the three that in his
NVR is solid.
NVR is another solid one, but they're also inside of the ETF, the home construction ETF, ITB, which is up 21%. And so if you look inside of that ETF, the holdings, what do you think the top three holdings are? The three that I just said, right? So D.R. Horton, Lennar, and NVR. And so they're positioning themselves.
Amazing.
They're looking inside of the real estate space, and they're saying like these are the three companies, but also look inside the ETF that has home construction, ITB, another place. If you're interested in investing in real estate.
I don't want to offend any of my political connects, especially going into InvestFest, but do we think that BlackRock buying up all of the put it on me. These are my thoughts and my views exclusively.
Thanks.
But do you think BlackRock and Blackstone are intentionally raising rental unit values to be able to set up an economy for just them going forward over the next 20 years? Because if they bought everything up, clearly they've stated that like this is a market that they have a lot of interest in, being like the real estate rental market. If they price everyone out and a collapse comes and they buy everything up for cheaper, is this by design, or do we think that this is a happy accident? Kudos and shout out to Larry Fink. Going back to my talk last week of every company has to find a way to be a monopoly on earth to be able to have an edge in the market that is sustainable if you really want to build generational wealth. I don't think any of this is done. Like rental prices have went up damn near double in the last year, 150% in the last 3 years. And the greatest benefiter of that has been BlackRock and Blackstone. Larry Fink, we need you to come to InvestFest next year, please.
Somebody put the call out to him.
Please.
Put the call out to him.
All right.